Hello and welcome to Zee Business. I am Shivani Tiwari and you're watching Weekly Brokerage Call. We have picked 3 stocks that are on the radar of brokerages this week. Our first pick is Tata Motors. Tata Motors was in focus this week as the company informed the exchanges about its plan to partially divest its equity shares held in Tata Technologies through IPO. Moreover, the automobile maker plans to increase the prices of its commercial vehicles up to 2% from January 2023. The company in its filing stated that it has been absorbing a significant portion of the increased costs, but the steep rise in overall input costs has compelled it to pass on some portion through this minimal price hike. Brokerage firm Macquarie is bullish on Tata Motors and has maintained an outperform rating. It recommended buy for a price of Rs 493, whereas global brokerage firm Morgan Stanley has maintained an overweight rating on Tata Motors for a target price of Rs 502. Moving ahead, our second pick is Dalmia Bharat. Earlier this week, Dalmia Bharat inked a pact to acquire cement assets of JP Group's flagship company, Jaiprakash Associates Limited, and its associate firms for Rs 5,666 crores. Brokerage firms CLSA and Morgan Stanley have maintained an outperform rating on the stock. CLSA has raised the target price to Rs 2,100 from 1,810. It said the deal addresses geographical concentration risk for the company and expedites the journey towards target capacity. On the other hand, Morgan Stanley has given a target price of Rs 1,900. Morgan Stanley in its report said that the deal will help diversify its geographical footprint and is also a step towards management's vision of making Dalmia Bharat a pan-India player. Jefferies tagged a buy rating with a target price of Rs 2,060, saying the acquisition will enable the company to emerge as a pan-India player. CT, on the other hand, has maintained a neutral rating with a target price of Rs 1,650. And JP Morgan has maintained an overweight rating with a target price of Rs 1,845. Lastly, our third pick is 197 Communications, parent company of Paytm. The fintech firm announced a share buyback scheme worth Rs 850 crores at Rs 810 apiece via an open market route this week. The company in its regulatory filing has said that it expects the process to be completed within a maximum time period of 6 months. Brokerage firm Morgan Stanley has tagged an equal weight rating on Paytm with a target price of Rs 695. JP Morgan has given an overweight rating on the counter with a target price of Rs 1100. JP Morgan in its report said that the number of shares bought back will be 10.5 million at the maximum buyback price of Rs 810, representing 1.6% of the paid-up share capital. The buyback amount represents 7% of the paid-up capital and free reserves of March 2022, and hence shareholders' approval is not required. JP Morgan further stated that Paytm's directors and key management personnel will not sell shares during the buyback period, and the buyback won't hamper any growth plans at Paytm's belief the company will generate excess cash after taking into account the investments required for growing the business. That's it from our end. See you next week with 3 stocks on the radar of brokerage firm. Do let us know which stocks you would like to know more about. Till then, happy trading.